Hello, ladies and gentlemen. Marty Erico, TradersAudio.com, coming to you live from the CME Group in New York. Get on this trading floor. Today, across the energy complex at the NYMEX, we've seen a huge ride in the crude, again, with a $3 trading range to the downside. We had basically a macro fund forced liquidation positions. Again, we saw a forced liquidation in their positions and caused a big sell-off. Again, we saw this fund obviously have a spillover effect into the other markets, but first and foremost, we've seen them have forced liquidation in the crude, in the gold, silver, and also cattle pits. So really kind of making this huge downside. Again, we also had trading halted for about 10 seconds on the trading floor this afternoon as well because of that downside. The exchange had to get all their everything in order, basically, as we saw a huge downtick in this market. Again, we almost had threat of limit down as that kind of spread around the pits, but again, a lot of selling in the pits from macro fund. So that was our first and foremost event here. We saw, believe it or not, volatility very firm, as was skew in ways of calls being offered out, puts being bid in the mid and back months in a big way. In terms of large locals in the pit today, again, large locals showing their offer in a big way, just kind of adding on to that speculation, and they kept on selling once they found the forced liquidation in the pit. So we saw a large macro fund short about 10,000 cars here into the morning, and he rolls half his position into the March, from the March to the April. He covers the other half of his positions, and then he puts on a April 95 put fence. So again, it was a April 95 fence he puts on, which is somewhat of a bearish position again here, rolling about 2,000 positions. Again, March was your contract that was expired today as well. So keep in mind we had expiration as well today with first notice tomorrow. So without a doubt, the trade of the day being the April 95 put was definitely a trade of the day, as we saw it trade over like 10,000 times in the pit with huge volatility in that particular put. So we're going to be looking obviously for a close and settle below the 94.5 level. Definitely bring us down to that $92 to $90 level. Again, we can maybe establish a new range as the option suggests between 92 and 96. So we'll have to keep an eye out for that in the next couple of days. If not, if everything comes all back to normal tomorrow, we can see this $95 level, this $94.5 level be our bottom of this range, and we can work our way back up. And speaking of a variable that can make this happen are the inventory numbers. So we had API inventory numbers come out tonight. For the crude, we had a build of 3 million barrels for crude oil. In the Cushing, Oklahoma plant, we saw a build of 500,000 barrels. In the gasoline, we saw a draw of 122,000 barrels. And in the heating oil, we saw a draw of 1.6 million barrels. So obviously, crude oil showing builds in Cushing, Oklahoma, and in their outright inventories for the API. As you can see right now on the chart to the left bottom here, we got crude trading 94.65. So in reaction to the build, it's trading lower, which it should be. Again, RBOB heating oil just chopping it up as they kind of just come in with a little draw. Really nothing too significant. Alrighty, so looking at forecast for tomorrow's numbers, we got crude showing a build of 2 million barrels. We have RBOB gasoline showing a draw of 1.4 million barrels, and the distillates, heating oil, showing a draw of 1.4 million barrels. So again, builds in inventories for crude and draws for RBOB and distillates. Also ahead of our big number that comes out at 11 o'clock now due to holiday this week, we have natural gas inventory numbers coming out at 10:30. Regular time, just like I mentioned here, the natural gas coming out at 10:30. We have crude and the EIA DOE numbers coming out at 11 o'clock tomorrow. So for the natural gas, let's just talk about that as well here, as we had just a little bit of a chop trading range. You can see in the overnight session on the right on the right bottom chart, you saw just a bit of a bid here in the natural gas due to this new recent 6 to 10 day forecast out showing colder than expected temperatures. Again, also holding that 325 level as well, kind of catching just a bit of a bid here above the 325 level, I should say. And for inventories tomorrow, we're expecting a negative draw of 119 BCF. So again, 119 billion cubic feet. We're looking for a draw, which we should be getting in the middle of heating season with which really there isn't too much time left for heating season. Again, just a couple more weeks, and then we can take that variable of heating season off the board. But again, colder than expected temperatures in natural gas. We're watching just a bit of a bid in that, and we are also looking at, obviously, our inventory numbers. So again, ladies and gentlemen, here we are going to be watching for tomorrow all of our numbers, and we're going to be watching here where we open up as well. And once again here, see how the market settles out after this big fund that was in trouble, forced liquidating positions. And again, I couldn't do it without my broadcasters that I had here with me across the board here at Traders Audio. Again, all the developing stories on the trading floor, these guys help me out with. So again, take a quick look at the premium package. It's a really good investment, if you ask me, to add some value to your trading. Again, we have multiple broadcasters all on the trading floors giving us some good insight, so I couldn't do it without West and Ben today. So without further ado, ladies and gentlemen, I hope everybody has a wonderful day. We will talk tomorrow morning. Again, Marty Araco, TradersAudio.com, coming to you live from the CME Group floor in New York at the NYMEX. Have a wonderful day.